Welcome everyone to a new Dividend video. Today's UK stock is Hikma Pharmaceuticals. I actually stumbled across them on none other than the Motley Fool. Brilliant place for finding just companies that you didn't even know existed. Because the FTSE 100 to the 250, you include all of them. That is a lot of companies to cover. And of course, I'm going to try and cover absolutely all the dividend paying ones. But every so often, some just go under the radar and some that are at a really good value. So we're going to look at Hikma. We're going to see what on earth they do. They're a pharmaceutical company, but there's a lot more to that. Going to see about their dividend, their current value, and what I think about them going into the future. Of course, none of it's financial advice, but you all know that anyway. So let's see. This article was the one that got me because it said down 30%. Here's a dirt cheap FTSE 100 stock to buy in the dip. Now, a lot of people might have looked at that and goes, oh, it's one of them headlines. It's meant to catch you. However, when this was wrote on the 14th of June, Hikma actually went even further down. So, potentially this is an even better opportunity for certain portfolios. Could well be. So it went on to say about 2020 being a difficult year for investors, and it continued on talking about it. But then it comes to a pharma stock with a capitalization of 3.6. It's now 2. So you can see that it's definitely gone down quite a bit. It's a biotech stock, so it's around, it's with AstraZeneca, GSK, sort of Haleon. Haleon's a spin-off from GSK, but that's the sort of companies that this firm is involved with. Big drug manufacturers, mostly, generic and branded pharmaceuticals. But, they've fallen 24% as of this article, but you'll see they've actually fallen a lot more. But the whole point of this article that I'm actually using it for right now is that it ended up talking about their... Where is it? So yes, why did it decline? Because, we need to find this sort of information out. If a stock goes down despite it paying a good dividend and it's in good financial position, you need to ask a few questions as to why. And looking at the news, and sometimes articles like this can be a real, eye-opener. So it was announced that the treatment for narcolepsy, would be delayed until late 2022 or early 2023, which caused the division to kind of, go... apparently that drug was was something very looked forward to release, and because it's been delayed, it affected their stock price negatively. Also, their earnings didn't really increase all that much year on year, but that could be due to an abundance of reasons at this point. That drug, by the way, for anyone interested, before you don't even have to Google it, I'll tell you, it's a brain condition where the subject actually falls asleep at inappropriate times. I don't know, I've never heard of it before, but it sounds pretty rough. So this drug's meant to help with that. Operating margins were expected to be 20%. Down from 20. So expectations weren't met, essentially, and that's what hit them quite hard. Then it also went on to say increased competition and a challenging pricing environment as the division contributes to 32% of the firm's revenues. That's their generics division. He goes on to say why he liked it. The delay didn't matter because everything else financially was looking well for Hikma, which, yeah, it was, and we'll look into it, and it still is pretty good. Let's see. Finally, they have strong shareholder returns. They have a dividend of 54 cents, so now that's about 3%. I think it actually increased again, so dividend per share keeps going up year on year. And it's well covered by profits and the share buyback program. Brilliant. Okay, so price to earnings ratio of 10. It trades below the other ones, such as AstraZeneca and GSK. Right, okay, let's go on to our normal page. Hikma Pharmaceuticals PLC, ticker symbol HIK. Now, based in London, they manufacture non-branded, generic and in-licensed pharmaceutical products. Okay, so let's see here. From their graph, they're currently trading at £11.92. Now, when they were writing that article, I think they were down... Where were they down? I think they were down to about £19 when they wrote that article, or 16. But anyway, they have plummeted. So what are they down? The last year, down 50%. And in the last month alone, losing almost 25%. Now, there is obviously a bit more news coming out and a few other things, but I can't get my head around exactly what's went wrong to this stage. There's not even really obvious news as to why their share price keeps plummeting. But this could potentially be a good position to jump in for myself. I'll tell you why. Because its lowest trading in at least the last 7 years was £9. So it's kind of their lower ceiling, and obviously their high point is about £26. As of right now, they're trading as close to that £9 mark, which was in February 2018. Let's see, how were they affected in March? They didn't even... Did they go up? Wow. They went up. Or is it March? March of 2020. Yeah, there you go. March. Most companies plummeted. They actually jumped a whopping £5 on COVID. That's one of the first stocks I've seen that defied most others. Most others plummeted because we didn't know what was going to happen. This one went up. Pharmaceutical companies obviously did very, very well over the pandemic, and it showed, but quite a few of them declined. I don't think Hikma does anything in the vaccine department, but pharmaceuticals are just a generally well-regarded industry, a well-invested industry during any such time as a pandemic. Not that we have too many of them, thank goodness. But yeah, at £9, I don't know. I'm going to look and see how the opening trading goes, because if they're going to keep going down, I need to have a deeper dive into them to see if I can find anything. But if there's any viewers watching, because I know the most useful people on this planet for any information is yourselves in the comments section. I always read them. Yous are really insightful. Sometimes I think you work for the companies or you're insider traders, because some of your knowledge is very in-depth and I don't even know where some of you find it. So brilliant. I do find new tools every other week, for looking into companies, but this is one of the few ones where it's failed me. I'm going to hit news. There you go. It's all good news. Oh, buy. Great. Yeah, it's a confusing one. They actually dropped out of the FTSE 100 into the 250. So that sort of tells you how that was going. But yes, this is their website. So we're going to jump in and let them talk about themselves for a bit. So by creating high quality medicines and making them accessible to people who need them, we shape a healthier world. Okay, that's their culture. Let's see their history. What all were they getting up to? I always love reading through the histories. You find out so much about a company. 1978, we were founded in Jordan. In the Middle East. Wow, that's not the most usual place to found a pharmaceutical company, but fair enough. We built our presence in the MENA. I know that's isn't that like Middle East and Asia? Isn't it Middle East and Asia or something like that? FDA inspected manufacturing plant in the region. So clearly they, being in the Middle East, there was definitely some market to begin with. Acquired land in Portugal for the construction of a sterile manufacturing plant for injectable pharmaceutical products. This was a major turning point and a step into the new region. Okay. 1990, they expanded into Portugal. That went well. They continued. They entered the US market by acquiring Westward Pharmaceuticals. In that decade, they also made more acquisitions. Tunisia and Saudi Arabia that built their strength across the MENA and then also internationally. They successfully passed the FDA inspections for the plants in Saudi Arabia and Portugal. Kept expanding. Let's see. They have been acquiring some amount of people. Alcan Pharma in Egypt. There we go. Through the acquisition of the Arab Pharmaceutical Manufacturing Company, APM. Then they listed themselves in the London Stock Exchange 2005, raising 124 million. And they've just went on from strength to strength. See, from the history of this is a very interesting, really intriguing company. Seeing how they've evolved over time, acquiring smaller companies, going into different markets and whatnot. Let's see. Roxanne Laboratories in Columbus, US, helped transform our position in the US market and build our non-injectable business in the US. And a new containment facility received FDA approval. In 2020, let's see, they had an acquisition of Teligent Incorporated, marked the expansion in Canada. There you go. And they also acquired Custopharm in the US as well. So, expanding, or what? Yeah, that's pretty interesting, I must say. Let's see, worldwide, is this where they're based? They have 32 manufacturing plants and 7 R&D centres. Where are they? Middle East and North Africa. Okay, so it wasn't Middle East and Asia, but Middle East and North Africa. Europe, MENA, US and Canada. Pretty widespread. That's good to see. Pretty a global company, no doubt. Now, when it comes to their products is where I feel, in the sense of, the only advice I could offer, if you were looking into super in depth, because I always believe in never invest in a company you don't understand. I understand these guys at the base level to the medium level, in terms of, I know the industry they're in, I know what they provide, and I know, we've already looked through their history. We'll look into their financials in Simply Wall Street and a few other things. However, in terms of actual products, a lot of these medications, especially those other ones, I am not too sure what many of them are. I would say the best thing would probably be to Google them, but look at this. That's just their injectables. It is massive lists of, I'm not a pharmacist, so I couldn't tell you what I'm looking at. I do have a few friends that are pharmacists, and I'm sure they could look at that all day long and tell me everything, which is probably a really fascinating thing. Fascinating exercise to torture them with, but you can just see these guys have access to some of the. Is that Benadryl? Did I see Benadryl? Benadryl. I know what that is. Okay, I know something. I don't know what Benadryl does, but I recognise the name. That was probably the only one I've recognised so far. But yes, products, as you can see, across US, Europe, Canada, because they obviously have to be approved by their own medical associations. So, yeah. Investors, time to go to understanding Hikma. That would be good. I'd like to understand. Business model is diversified, giving us many opportunities. As you can see, they have the injectables and the non-injectables, so good spread there. Strategy is to make healthcare more accessible by leveraging our strong foundation and building a portfolio that anticipates future health needs. That's good, because you need, obviously investing in companies that will be needed as the population grows, as population ages, as we encounter more and new advanced things. That's good to see. Measuring progress as well. Okay, so I've had a look at them. We've had a look at, I may as well look at the business model. We're this far. Our resources, what we do, and the value we create. So they have R&D, highly skilled people, good values, good capabilities, and strong relationships with regulators. Okay. Injectables, generics, and branded. There we go. So now we get an idea as to what's going on here. Generic medication. It's not branded, so they can they can manufacture them, I think, quicker and cheaper. So they fill in gaps in supply chains. Sometimes you get medication and it is branded, and then sometimes you get it, it's just completely not branded. Well, that's what generics is. Let's see, develop and innovate, manufacture, talks about their plants, FDA inspected, value we create. They have 670 products. That's mad. 313% shareholder return over the last 10 years. 73% employee engagement mode. Oh, nice. 2 of our employees completed 47,000 instructor-led learning hours. What? It's crazy. Okay, jumping back up to this. I want a nice presentation. Can you give me a nice presentation? Happy days, you can. There we go. First half of 2022. Let's see how you line up to other ones. Core revenue was 1,213 million. Operating profits pretty good. 24%, 169. Operating cash flow. I love cash flow businesses, heavy cash flow businesses. So, pretty good. Diversification, let's see. So, this was their revenue. And obviously, it's pretty reflective as to what makes most of their money, the injectables. That must be their primary focus. Obviously, they started off as that, so it makes sense. Yep. Just going into other stuff. Okay, on to Simply Wall Street. the place I use for all my financial information. I do have the premium account. If I do end up getting a affiliate for this to give you a few weeks free, I will certainly put it down in the description and pin a comment. Until such a time, I'm going to just use my own paid version to show you as much information as I can. Trading at £24, now we're trading at £12.09. I actually think it's £11.92 now. The Snowflake model is based on several things. So the value of the company, the future, the past performance, health of financial health, and their dividend. Now, you'll notice a pattern. They look very, well, it says here they're undervalued established dividend pair. But compared to GSK, you can see that it's very, very similar. Except GSK seems to have a better future outlook and better everything. But we're going to look at the risk checks. Are they in a good financial position? They have a high level of debt, but we will have a look at that. Company is currently profitable, and you can go on to see the dividend sustainable. Share price has been stable. I don't know if that's incredibly true, but earnings are high, profit margins decreased, and a few other things it throws in there. But let's go down and see its valuation. Now, the valuation for this, it's PE ratio of 8.4, a bit lower than the article mentioned. But compared to competitors, it's actually lower than GSK, which is a competitor. I'm very, very surprised that it actually had this normally has companies that are completely not in that industry. For UK companies, for American companies, it's always spot on. But you can see here, it's got a slightly lower price to earnings ratio versus its peers, so a bit lower than GSK. Going on down here, we can go to here. So fair value, they reckon, with a discounted cash flow model is actually £55, nearly 5 times its current price. So that makes it about 78% undervalued. That's crazy. I don't know. It's not looking good for them. And their average target is, they were meant to still be trading at £23-25, and they are not. They are half of that. So definitely the analysts missed their target clean with that one. Revenue's meant to decrease over the next year and then increase again. I don't ever, you know my qualms while looking at this. I don't know. Predicting the future in certain in forecasts is, it's not something I ever enjoy looking at. Let's go down to past performance. We can see that they had a pretty abysmal year in 2017 to 2018, but they've been profitable any other time, actually really increasing their profits over the last 3 years. Assets to liabilities, pretty standard, nearly double, not bad, and the short term covers their long term liabilities as well. They have been creeping up on the debt equity ratio. They were actually pretty low, 30%, but a lot of companies utilize debt differently and, through acquisitions and whatnot. So that's actually not a bad thing. Debt's 1.5 billion, but as you can see, it's covered quite well by everything else, even though they do say it's considered quite high. Going down to their dividend. Now, their dividend's my favourite part about Hikma. They are a growing dividend, and I love to see growing dividends. It says they're not the top 25% of the market, but they don't need to be. At 4.16, that's a pretty modest dividend all day long. And their dividend per share, as you can see, has just been creeping up year after year to where they are now at 3.5% yield. Now, of course, if you loaded up on those shares and they doubled or tripled, obviously that's a pipe dream for anybody, but if they did, their dividend yield would obviously be pretty slashed because of that. Cash payout to shareholders, pretty good as well. Nothing, anything, if you ever see over 100%, ask a lot of questions. See if that's sustainable, for example. Ownership, someone bought 1,500 shares. Nice. Institutions own most of them, with private companies and the general public in second and third place. BlackRock own 6%, Vanguard at 3%. I always love pointing them two out because they're just in every company. They're the only ones I can consistently point to. Darhold Limited actually holds 27%. Darhold, is that maybe something to do with the Kingdom of Jordan? Or with Jordan, maybe? Because they were founded in Jordan. I don't know. That's just me, guessing. I'm not actually too sure who that is. But yes, over to Dividend Max. Didn't feature in my last video because they didn't actually know of Coca-Cola HBC. But thankfully, they do know of Hikma. Now, I did miss the boat on the ex-dividend date of the 18th of August. Their next one will be in March, so quite a ways away. But their annual dividend yield, or annual dividends, have been growing year on year from 2012. A wee bit of a slash in 2011, but we can excuse that to see that they were rising year on year on year on year. Fantastic. As you can see, last year they paid 34 cents in 18 and then 36 cents 19. I love to see a growing dividend. I will admit, very attractive chart. They are a company that are certainly going to be put on my list to keep an eye on, especially at their attractive price to yield right now. So yeah, that is Hikma. We're going to go over to Trading 212. This is the stock brokerage that I use. No fees. I don't do any of the CFD trading. So it comes quite well recommended by me, I will admit. No financial advice. I just really enjoy using the platform. And I always have an affiliate link in the description if anyone wants to apply for it. Now, I don't think it's giving out free shares at the moment, but it changes. If you're seeing this video in a year's time, they might be carrying out that promotion. So yeah, be sure to sign up using that if you're wanting to use it. And just to give you a quick glance over, this is their very nifty chart. You can go as advanced as you want, add all sorts of graphs and whatnot. Going down gives you a quick detail of the company here, and then you can go down employees, industries, market cap, PE, revenue. Then they give some really neat graphs. So growing revenues year on year. Their profit has actually shrunk, but revenues have increased. So, you got to take the good with the bad. And total assets have increased. Total liabilities have somewhat remained steady. Cash flow, though. Cash flow has went through the roof. Their investing year on year is also a fantastic thing. And financing, how much they pay out in dividends, I'm always intrigued to see. 120 million was paid out in dividends. There we go. So they've actually 103 in positive cash flow this year so far. Or well, in 2021. 2022, I'll have to see what that graph comes in at. But yes, that's Hikma Pharmaceuticals. Company highly recommended and highly wanted. A lot of you wanted to see a video on it. I'm glad I could provide. So yes, let me know what you think in the comment section below. Do you hold any Hikma in your portfolio? Do you have any ideas on why their stock price taking such a beating? And yeah, I'll see you all in our episode. Bye bye.